Good morning, everybody. It's Monday, June 17th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at July corn down 4.5 at 445.5. July soybeans were down 15.5 at 1164.25. And July Chicago wheat was down 15 3/4 at 597. Good morning, guys. Hope everybody had a nice Father's Day, nice weekend, good weather for majority of the folks through the Corn Belt here. Interesting market we got shaping up. Justin, it looks like you've got pretty hot white week. I think some models turned a little wetter in more the extended time frame, but maybe just a few thoughts here as we kick off the week.
Yeah, I think the models kept flipping a lot. We have heat. It is, we talked about this. It's not going to necessarily hurt, the corn crop in June, but you are getting closer and closer to that, that critical window, beginning of July time frame, and the models keep flipping on whether how much moisture is going to come in, after this week's heat. So obviously we sold off aggressively on Friday. I think we broke another 2 cents after the modified, made really bad trades technically, and opened up, another nickel lower overnight. So technically it looks pretty bad. Funds didn't really shake any shorts out of the market, continue to add in soybean complex. So yeah, you got a lot of things kind of going against, all the markets right now. Wheat's making lows. Corn and beans are making new lows for the move. So not a friendly vibe out there for sure for, row crops.
Yeah. Ben, maybe a few thoughts on your mind here from the East here this morning.
Yeah. I think that we've been mentioning this now for at least a month that we still have to deal with July options expiration, and we have to have first notice day for both July corn and beans. And that's typically in bear markets has been the place of greatest pain when we get into first notice day. I think this time will probably let us know how much corn was sold on the two nice bounces that we've had over the last 4 or 5 weeks. And then it gets into a really tricky time frame of following that up with the June 28th report. And, that's one that has a lot of variables in it. So I think it's going to be a volatile market. Weather models all the weekend were all over the place from, Friday evening into Sunday morning, a pretty major flop there. So, a lot of uncertainty as we get into the pollination period, and we're told there's an abundance of corn out in the country, and I think that there probably is in places, but we break, and again we see the July SEP spread starting to tighten a little bit. You get reports that it's hard to originate beans. On the break, the bean spreads relax. So I think there's a lot of things at play here. You mentioned weakness in wheat. We're getting into some pretty heavy wheat harvest at this point. And that coupled with the mechanical nature of options expiration and first notice day, just lending some pressure here. So I think we're going to see a pretty volatile period over the next 3-4 weeks as the weather kind of materializes, as we find out where any adjustments for quarterly grain stocks, and then of course acreage. So the seasonality is that at this time of the year, we tend to start to bleed out. We do have a later pollination window due to a little bit later planting. So it'll be interesting to see how this works out. We're steady doing business. And there's a lot of risk points over the next 10, 11 trading days.
Yeah, Ben, that's interesting because I've seen a ton of stuff posted on seasonalities.
Yep.
It's funny. Obviously the seasonality is, June time frame is, where you make the most highs, but generally you rally from November to June.
Exactly.
So we've been counter seasonal for that entire period. And so now I think we're piling into something that's been counter seasonal, trying to make it act like it's been a seasonal.
Yep.
So, counter seasonally, if we continue, we would bottom this time frame.
Yep.
So it'll be interesting. Like I said, it all kind of comes into the same time frame as these big reports and critical options, expirations, everything. So I think the next 2 weeks is gonna be pretty telling on the trend that the market wants to go, my opinion.
Yep.
Dust, you're muted there, but if you're trying to say something, there you go.
Yeah, thanks, Dan. Yeah, I was just going to add to that. The funds are very short going into this time frame, and there are still some discrepancies on these maps, right, between the GFS and the euro. So here's the euro, the more threatening forecast. We're talking, quite hot for the next 14 days, definitely in the next 7. This gets us to June 30th. Precipitation levels are, still slightly below normal projected through this time frame, but a very volatile forecast. We're not sure exactly where these storms are going to end up. And we go to the GFS, and it's much less threatening from a temperature and a precipitation standpoint. But the euro has been a better model. So I think that's something to keep in mind. Is you get into this time frame, we all know how it is when the corn's rolling up and it looks awful because we missed the rains and it's 95 degrees outside. I think that's where the emotions kick back in after that period what Ben and Justin were just talking about, where there's been a lot of selling. If we walk right into backyarditis of rolled up corn, I think the market's going to have a little jolt, a reminder of the fact that we're not risk free on the yield event still.
Yep. And I would just say one thing I'd comment too on just strategy is options have gotten pretty cheap. They've completely, taken a lot of risk premium out of the options for this time of year. So if you had a major opinion, bullish or bearish, they're relatively cheap, especially if you're looking at, 2-week options or 3-week options or 4-week options. They're pretty easy way to play, or defend your position using those, I think, for what could be a volatile time frame, as Ben talked about.
So you bring up options. We had a question come through. Nick out in the East was wondering, is the market indicating anything through, the option market in terms of what their overall writing opinion is at this point?
Yeah, Ben, you can answer that. You're more the options guy, but I would say they're factoring in no movement, as far as, but go ahead, Ben, you can give your take.
I look at it as, I think that the vol structure of the short dated August, it continues to be high relative to everything else in SEP, which is not abnormal for corn this time of year. And then over the horizon, it flattens out. There's a pretty wide vol spread there because I think that you're going to have to really recruit sellers for that time frame. It can be an awful situation to be short movement from a professional trader standpoint in a really volatile market. So I think that is the one that kind of sticks out to me, just that hump that they have priced the higher volatility into those months. Our call skews have come down a lot after that first rally, which, takes away a little bit of, kind of that fear complex. It makes some of your structures less appealing. Soybean options to me are the ones that are the flattest of, they're really cheap. There's very little call slope in there. There doesn't seem to be any fear in there today. So typically if you see slopes in corn and wheat, if you can see collars or combos where you're getting 3-to-1 to the upside, that really gives you a lot better perspective of how they're working, and they've come off that quite a bit. So that's definitely softened on the skews, but the vol on particularly for the month of July and then partially August is still elevated, but it has softened in the last couple of days. Last week, the August 465 short dated straddle was trading between 40 and 41 cents. It sat there for quite a while. It's into about 36 this morning. I don't know that anyone would want to be short that straddle less than 30 cents going into the the 28th report. You think in terms of what's a move that could hurt you, and a limit move would be the one that would get you. So, it's a little bit of Kentucky windage on looking at straddle prices and volatility, but there is some risk factored in for volatility, maybe not as much for skews in that July timeframe.
Yeah, careful what you ask Ben about options. He can go.
Yeah.
I'm gonna need a crash course after the show today. Jeez. So what are you saying?
I think that the market realizes that we have price risk in both directions for the month of July, and that is economics 101. In order to recruit someone to take the other side of it, the professional trader has to get paid more to take that risk on. And that's, to me, that just tells us that that's when we're going to know whether or not we're going to make, break, or damage or improve this corn crop. And we may do all of those things over a period of a month, multiple times. And that's where being the guy that's holding the short bag on that has to manage it. So it can be a very tricky trade.
Oh, very good. We got a couple minutes before we come into the open here. Rye, last week, hog slaughter down about 1.5%. Beef production was a little bit higher, and slaughter for cattle was just a little bit higher. What are your thoughts here as we start the week?
Yeah, well, it was kind of an interesting trade. We kind of broke, just weakened up all week, and on Friday we had just kind of a big explosion, in the meats in general. So I don't know if we found a new buyer, or if there was some new kind of export demand that was shaping up, or if it was just overall just, you've kind of beaten the heck out of these markets here for the past few weeks. Hogs were on contract lows going into Friday and had a little reversal here. So it looks like we're trying to kind of make a bottoming formation. And cash cattle just continues to just, I think, outperform expectations overall. We had Southern trade was about $1 higher, 186. Northern sales are just blowing the doors off of new records here. High side was up to 311 on the dressed. So, and everybody was kind of leaning the wrong way. It looked like beef prices were about ready to top seasonally, and sure enough, last Friday they choice was up 158 and select was up $4.56. So there was a big it kind of felt like everyone was kind of on the wrong side of the trade going into the end of the week, and the market had quite a bit of air above it just to go. So we'll see if that kind of goes, kind of translates into some better prices here this week. But all eyes are still going to be on the beef, going to be on the cash trade. Hopefully it's not just kind of a one-off kind of rally here, but this is the time frame where beef will seasonally top. So I think that's still just going to be what we're really focused on. And it looks like we just don't have a lot of threatening kind of weather here towards our side of the markets. And I would just say overall, looking for some real follow through. Like I said, it just kind of feels like funds were kind of net sellers going into this time. Managed money took off 4,000 contracts in cattle. So we're carrying a pretty small position here, just a net long 48,000, and they only sold 357 in the feeders. So it looks like just based on that kind of movement, I think just especially in grains, I think the feeders are going to be following what happens next here as well. I think feeders in general just kind of looking for that move higher if corn is really going to stage a big break from here into first notice day, or if we were going to break, if we were going to get some really big kind of weather market. So I think the feeders are going to be watching corn this week pretty closely as well.
Okay, very good. We'll keep an eye on that. A couple of administrative items. We've got crop progress and conditions out here this afternoon, 3:00 Central. So we'll take a look at those. Sure, we'll visit about those tomorrow morning. One other piece of info, markets will be closed during the day on Wednesday. There will be no markets. We'll have a normal close on Tuesday, and then we'll reopen Wednesday night. So that'll kind of break up the week a little bit there from a market perspective. So that'll be interesting with weather models and things of that nature. So we'll keep a close eye on that as well. Just came into the open here. We got July corn down 4 1/4. 445.5 is the last. July soybeans down 15 3/4 now, 1164. And July Chicago wheat's down 15 1/4 at 597.5. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate all the thoughts and comments here this morning, guys. It was a good show. Look forward to talking to everybody there tomorrow. Hope everybody has a great day. Thanks again.
Thanks, Dan.